Hello traders, welcome to the new Forex Weekly Trading Forecast for the trading week beginning on July 22nd. Now, in the upcoming week, we do not have much announcements on the basis of economic calendar. Moving forward, we will have some existing home sales, new home sales data coming up, followed by PCE report on Friday. So more or less, it's going to be a technical play in the coming week. So let's get onto the charts and find out where are the trading opportunities. So let's begin the analysis, and the first instrument I'm going to take is Australian dollar versus Swiss franc. Let's begin our analysis from the weekly frame. And here on the basis of weekly time frame, I'm just going to clean up my chart, and I need to add MACD here. Bit of adjustment on the indicator. I'll be using area here. That's it. So let's begin with Australian dollar versus Swiss franc. If you notice, on the basis of weekly frame, it's been in the downward trend. We can take this high. So we have high followed by lower high, next lower high, then again lower high, and this is the latest lower high and the new one, followed by lows. The major low comes here, then the next lower low, then again we have a new lower low, then we got here double bottom or kind of triple bottom here, and the triple bottom is formed in conjunction with bullish divergence here. If we apply bullish divergence, then the BOS is to be identified, and here is our weekly BOS level. So what is the message here? The buyers, after the bullish pressure which was created due to bullish divergence, the buyers could not break the BOS. Let's move down to daily frame now. Now, if we start our analysis on the daily frame, here is the double bottom I'm talking about. Again, it comes with bullish divergence, and here is the higher high pattern which comes with bearish divergence. So this is the full cycle. So our bullish cycle starts from this low and ends here. Let's apply Fib retracement on the complete cycle. So starting from the lowest point, connecting to the highest point. Now if you notice, after creating the bearish divergence, this is the bearish BOS which was supposed to be completed by the sellers. Now it created first leg down, then we got the corrective leg up, and now we are in the third leg. So I'm going to apply Fib extension in the downward direction. I'll start from the highest point, connecting A to B and connecting B to C here. ABC pattern applied here with Fib extension. Since it's bearish, I'm going to use red lines here. Now I'm also going to use the trend line here. So the trend line begins from the lowest point, and here we got the breakout. So this is the break of trend line, and the trend line, once it's breached, it's broken, we always get a retest. We got the perfect retest. So the buyers, they push the price upward exactly towards the trend line level, and now again the sellers are enjoying the control. Based on MACD, we have bearish momentum building up, so the environment is totally bearish on the daily frame as well. Now let's move down to 4-hourly chart. Now on the basis of 4-hourly chart, I can see that the sellers are enjoying the control. This is the highest point, followed by lower high, then a steep crash, and it's sideways consolidation here again, which creates a lower high, and I do not see any signs of exhaustion in the bearish trend. So the sellers, they are enjoying the control, and most likely this trend is going to continue until Fib extension 100%, which is also confluencing with the Fib retracement 50% of the previous bullish cycle. So 0.5861 is the target. Now I'm going to apply the lower time frame trend line here. Now, on the basis of lower time frame trend line, I'm going to connect a new trend line here, joining the lows on 4-hourly chart. Now since it's been in the bearish trend and it's been quite a while, so after this steep fall, I'm expecting that the sellers will take a pause around this trend line. We will get some correction here, and the correction should be taken as an opportunity to sell, and we should look for the downward target at this level, 0.5863. Now we can use, now because the current 4-hourly bearish leg is not yet done, so I cannot apply Fibonacci retracement here. I can just assume that the current trend will end here. On the basis of this assumption, I'm going to use Fib retracement starting from this high until this low, and I'll be looking for the correction upwards, maybe 50 to 61, or might be up to 80%, and then I'll enter into a sell trade. So this is the plan for trading Australian dollar versus Swiss franc, bearish plan for the coming week. If you want to check further down on the lower time frame, that is 1H, still the pattern is bearish. I can see high, lower high, again sequence of lower highs. I can see lower low formation here all over, and there is no bullish divergence at the moment. So one more push required to complete the bullish divergence here, which might begin this corrective formation and then continuation to the 100% mark. So this is the plan for AUDCHF. The next instrument is Euro versus New Zealand dollar. Again, back to the weekly frame here. Now I'm going to clean the chart, and I'll begin my weekly analysis from the bullish divergence at this level. So here it's a little subjective, it's not a very good pattern of bullish divergence, but still we got the beginning of bullish trend from this low point. I'm talking about the lowest point here. So this is the weekly low I'm taking into reference. Again, we got a higher low, sequence of higher lows here, and in conjunction with high, higher high, higher high, and higher high. So there was bearish divergence on the top, bullish divergence at the bottom. So this is the full bullish cycle, starting from the lowest point to the highest point. So I'm going to apply Fibonacci retracement, starting from the lowest, connecting to the highest. Now the trend is strong, so whenever we have strong trends, we are always looking for 50% retracement, but in this case, whenever the trend is stronger, then the correction is usually up to 38%. So here we have 38% correction done. So the new base is formed at 38% level. So I'm going to apply a box here. So this is the beginning of the new trend. Now let's move to daily. Now if you notice on the daily frame, I'm again going to apply a trend line here. So this trend line is breached the falling trend line. The buyers, they have taken full control, and now this is the horizontal resistance which is coming into play. So currently the buyers, they have taken the price back to the previous high, so we are very close. But the point to be noted here is I do not see any signs of exhaustion. So the bullish trend seems intact because there is no divergence on MACD histogram or MACD lines. So on daily frame, the buyers, they are maintaining the momentum. Let's move down to 4H. Now on the 4-hourly chart, I can see that there is scope to apply a new trend line, and there is also bullish pattern. So here we have low, higher low, higher low, higher low, higher low, in conjunction with high, higher high, higher high, higher high, and now the latest high is formed at a crucial resistance level. So bearish divergence is anticipated. On daily frame there is no slowdown, but on 4-hourly chart I can anticipate that bearish divergence will come into play, maybe on Monday or Tuesday. It might come with one more high. So short-term correction is anticipated, maybe the retest of the rising trend line, and then we will look for buying opportunity only. So any discount, any pullback in Euro New Zealand should be taken as an opportunity to buy, because daily is bullish, weekly is bullish. Only on the lower time frames I'm anticipating bearish divergence to be completed. Yes, definitely it looks like on 1-hourly chart I can see that only between the last series of highs I can see MACD histogram containing divergence, which might bring short-term correction, and we'll take this correction as an opportunity to join the buyers. Now let's assume that with the help of Fib extension on the latest 4-hourly bullish trend, I'll mark it blue here. Yes, so currently we are at Fib extension 400%, and most likely most of the bullish or bearish cycles, they get completed around round figure numbers, Fib extension 400, 300, 500, like that. So we might get completion of this short-term bullish trend on 4-hourly chart. Important resistance here, so we might see 1 or 2 fake highs, capturing some liquidity here, and then short-term weakness. But my plan is not to trade the downward cycle, not to trade the correction, but to get into the bullish trend. Now what are the targets for the buyers? So again I'm going back to daily frame, and on the basis of the weekly bullish cycle I'm going to apply Fibonacci extension on the bigger scale. So here is the first push up. So ABC applied on weekly. I'm going to turn it into green color. So these are the levels to be noticed. So the next level is 1.8250. Again, currently we are at 8100. So this is again a quarter number, which are the psychological strong levels. Once the buyers, they breach this level, which is Fib extension 200% of the weekly bullish cycle, then the next bull run will continue up to 1.8969 or 1.9000, the round figure psychological mark. But the first target is 1.8250. So coming down to 4-hourly chart, if we get discount during the week, so we might get opportunity to enter into a bullish trade when the sellers will push the price back towards the rising trend line. So we'll be joining somewhere around 2.61, maybe 300% mark. Let's apply risk and reward analysis here. So going by the long position, let's enter around 2.618, that is 1.7870, with the stop loss below 161, and the target is 1.8250. So our risk and reward will be 1.75. So here's the plan for Euro New Zealand bullish for the upcoming week. Okay, and the next currency pair we'll take is US dollar versus Canadian dollar. Again, going back to weekly frame, I need to clean up the chart, and I'm going to analyze the beginning of the bull run from the weekly low point here, which was at 1.2000. Now I'm going to look at the pattern here. The pattern is bullish, low, higher low, higher low, higher low, higher low. Then we got some sideways consolidation. Again we got a higher low and the next sequence of higher low. So it's continuously printing higher lows. I'm going to apply a fib extension in the bullish direction. So I'll start from the low at 1.2000. I'll connect to the first high and the first higher low here. So the next target, because currently the price is sitting and enjoying the support being formed at 1.618, so let's mark a support box here, and the next upcoming target is 1.3912 based on fib extension 200% applied on the first ABC pattern of weekly cycle. Let's move to daily here. Now if you notice, we got strong support at 1.618, so price never went below 1.3611 after creating this pattern here, and I do not see any signs of exhaustion because we have all through we have higher formation and we have higher formation on MACD lines. There was some bearish pressure due to the histogram divergence, but the BS was way too deep, which was never completed. So weekly bullish, daily bullish. Let's look at the momentum on MACD. So no signs of slowdown. Histogram is bullish and still rising. No divergence, no exhaustion for the buyers. I can apply a new trend line here. So currently it seems that the buyers have just breached the falling trend line on the daily chart with no signs of exhaustion. Let's move down to 4 hourly now. Now on the basis of 4 hourly frame, we got double bottom here followed by higher lows, higher lows, higher lows and higher lows in conjunction with high, higher high and a new higher high being formed. Definitely I can see some signs of slowdown here, but the divergence is potential, anticipated, not yet completed, because we do not have bearish cross here. So there could be some short-term pullback, maybe around this area. I'm going to use fib extension on the 4 hourly chart as well, starting from the first low connecting to the high. So ABC applied again. So the upcoming target is fib extension 3.618, which is at 1.3750. So currently we are at 1.3727, very close to the next upcoming resistance, and this is the rising trend line being maintained. I can see that the buyers can push the price towards 1.3750, then the bearish divergence would be completed, which might bring short-term sellers back into the game. Now again, the pullback should be taken as an opportunity to buy, because the higher time frame direction is still bullish. So any discount, any drop towards FE 2.618, first potential buy level, followed by FE 1.618 should be taken as an opportunity to buy once we get the pullback. This is the discount would be too less, so I think entering around 1.618 makes sense. So we'll be joining the buyers around 1.3670, and our ultimate target will be 1.3910 on the basis of higher time frame fib extension bullish cycle. Okay, so we are done with the currency instruments. Now I'm going to crude oil, and starting from the weekly frame. Now on the basis of weekly frame, first of all, again I need to clean my charts. Here we go, and I'm going to apply fib retracement on the lowest, which was formed during COVID and post-COVID highest point. Now if you notice, we have triangular formation here, because after correcting from the highest level till 50% mark. This is the lowest point formed, followed by higher low, higher low, higher low, and higher low. And we also have pressure building up from the high. So we have high here, followed by lower high and lower high. So it completes the triangular formation here. So I'll be using trend line to complete the triangle here, joining the higher lows, and I'll be using trend line tool again to join the lower highs. So this is the triangular pattern, and currently crude oil is locked between the highs and the lows, the upper trend line and the lower trend line on the weekly frame. Now let's move down to daily. Now on the basis of daily frame, I can see that there is an opportunity to apply fib extension in the downward direction because the pressure is clearly bearish on the daily frame. So here I'm talking about that I'll be using first high and low. Now if the buyers would have been stronger, then they would have created a new high breaching this level, but the buyers could not breach the trend line which is plotted on the weekly frame. So I'm going to apply fib extension in the downward direction. I'll start from the high, I'll connect to the low, so joining A and B, and now I have applied fib extension in the downward direction, completing A, B and C. Now since it's bearish, so it's better to use red color here. Now we got one more opportunity, so we have a new high, low, and again a lower high being formed. So I'll be applying one more time fib extension in the downward direction on the next bearish pattern here. So the first target on the latest fib extension applied is FE 61.8, which means that crude oil can easily touch the price level of $75. Currently it is at 77.48, or you can round it off to 77.5, but the next target is 75. Now let's move down to 4H. Now on the basis of 4-hourly chart, the pattern is still bearish. I can see high, lower high, lower high, and lower high, followed by low, low, and new lower low is being formed. No bullish divergence in play, so sellers are not exhausted. They are still maintaining the momentum, and I'm going to go with the sellers. Any opportunity during the week with the rise should be taken as an opportunity to sell. Any pullback should be taken as an opportunity to sell. So if we get pullback during the week towards, you can say, the price level of 80 or maybe 79, until the price remains below this trend line, it should be taken as an opportunity to sell with the target of 75. Invalidation should be the breach of 82. So if you get a close above $82 mark, then the selling plan should be invalidated. Otherwise, 75 is on the cards. So yes, everything is bearish even on the 1-hourly frame. Lot of bearish pressure on crude oil. High, lower high, lower high, lower high, lower high, and lower high. Again, we have a sequence of lows and lower lows, and there is no bullish divergence. So no help coming to the buyers as per the technical price pattern. The next instrument I'm going to talk about is NASDAQ. I need to start my analysis from the weekly frame. Again, I need to clean up my chart. So here we go, and I'll be starting from the lowest point, the lowest level, which was formed in March 2020 during COVID. I'll be using it as my starting point, and I'm going to apply ABC fib extension in the bullish direction, starting from the COVID low, connecting to the high post-COVID and the higher low. So yes, so here we go, and we got the extension level here. So price has touched 61.8 and FE 100%. Now this is a major resistance which has formed on the extension level of 100%, plus I can see bearish pressure here. MACD histogram has started slowing down. MACD lines, although they have not yet completed the bearish crosshair, but I can see there is loss of momentum. MACD lines, they have started curving down, so there is potential bearish divergence forming. I'll be using trend lines here again. I'll be connecting a rising trend line here. I'll be connecting a new rising trend line here, so which will help us in identifying the bearish targets. Now based on daily time frame, it has completed bearish divergence, so the move higher than 20,416 was not sustainable. The buyers, they could not maintain their control in the market, so this turned out to be a fake break. The sellers, they pushed the price back to the same level with a very tiny bounce from the buyers, and now the sellers have broken this level, so 20,400 becomes major resistance. We've got bearish divergence here, and the BOS is going to be completed maybe on Monday. Now let's move to 4-hourly frame, and on the 4-hourly frame I can see there is an opportunity to apply ABC in the bearish direction. I've connected A, B and C here, and the sellers have taken the price to fib extension 200%. A bit of slowdown is seen on MACD histogram on the basis of continuing divergence. Again, not a convincing pattern here, but again due to continuous selling on the lower time frames, there might be the condition of oversold, so a bounce is highly anticipated. I'm joining a falling trend line here, the resistance line. So during the week, if we get an opportunity, the retest of the falling trend line, maybe a retest towards 20,194, 20,200 psychological number, we should take it as an opportunity to sell. And the next downward target, let's see, it has already completed 19677. The next target will be 19,357, followed by 19,159. I need to go back to daily frame to check the Fibonacci retracement levels. So on the basis of the bullish cycle, starting from this level, which was around 17,108, I'm going to apply Fibonacci retracement only on the latest leg. Why? Because the rising trend line on the daily frame is not yet broken. So this is the rising trend line. If I see a break below this daily rising trend line, then I'll be talking about a deeper correction. Else, this could be the retest of the rising trend line and continuation. If we get a break below this rising trend line, the first one, then we'll talk about the deeper correction, right? So otherwise it doesn't make sense. So I'll be applying Fibonacci retracement only on the latest up move. So starting from this low, connecting to the highest point. Now we may use the duplication of fib levels. Moving now to 4H. Now here we go. We have already crossed 23%. The next is 38 and 50. So 38 retracement level is coming around 19,495. So the next upcoming target is 19,500 to 19,357, followed by 19,159 to 19,048, or round number 19,000. So it is highly probable that NASDAQ may continue bearish trend until 19,000. If it crosses below 19,000 or when it breaches the rising trend line on the daily chart, then we'll talk about the deeper correction. And the next instrument I'm going to talk about is gold. Now again, on the basis of same pattern, I'm emphasizing more on the rising trend lines or the falling trend lines. So basically, along with my fib analysis, my chart pattern, I'm also using trend lines in my today's chart reading. So if you notice, this is the daily chart for gold, and I've applied multiple trend lines here. I'm talking about the latest trend line, which is like here, which is not yet breached. Apart from that, we have one more trend line which is quite steep, and even this trend line is not breached. So the latest red color trend line, give me a second, I'm not able to apply here. I'll use it one more time. Here. So until we see break below this trend line, I cannot expect gold to enter into deeper correction, right? So I'm going to apply 4-hourly trend line. Now 4-hourly trend line is breached. Let's do one thing. I'm going to start with a fresh chart starting from the weekly. Maybe the existing drawings, the existing lines could be confusing. So I'm going to take into account low, higher low, again low and higher low. So I'll be applying fib extension here. Now on the weekly frame, I do not see any bearish divergence. The pattern is still bullish. Higher high on MACD histogram, higher high on MACD lines. So higher high. So definitely we are in some temporary consolidation, temporary pullback, but no damage to the bullish pattern here. I'm going to use trend line here. So this is our rising trend line plotted on the weekly frame. The next trend line is here, which is connecting to the latest two higher lows, so which should be clear on the daily chart. So this is our daily rising trend line, not yet damaged. Again, I'm going to apply a new rising trend line, which is on 4-hourly chart. So even the 4-hourly rising trend line is not yet breached. No damage to the buyers even on the 4-hourly chart. Now going by the latest highs, we have higher high formation here, and we have higher high formation on MACD histogram. So definitely no damage or no pressure building up from the seller side. Now moving to 4-hourly chart. Now on the basis of 4-hourly chart, I'm going to apply Fibonacci retracement starting from the lowest point, which is connected on the trend line, and connecting to the highest point. So I'll be using Fibonacci retracement here. So right now we are very close to 50% retracement level, which is coming around 2389. It could go deeper to 61.8, which is around 2367. That's it. I'm not anticipating a deeper correction in gold. So maybe a retest of this rising trend line. And then continuation in the bullish direction. Now let's move to the next trend line, which will be on 1-hourly basis. So here we go on 1-hourly chart. Now only 1-hourly rising trend line is breached. So short-term bearish plan only for the short term. Now again, if you notice, I can see some continuing bullish divergence building up. It means the sellers are exhausted. Market has entered into oversold condition. So a rise here is anticipated. I'm expecting on the opening of the new week, gold might rise towards 2440, and we may get one more push downwards, and it may complete the correction towards 2390 followed by 2370, and I'll be taking all the discounts as an opportunity to buy because the higher time frame is still bullish. I do not see any damage to the bullish pattern on the higher time frame. Now only in the short run, very short run, I'll be taking opportunity at the current price as buying opportunity. I'll be exiting around 2440, and then I'll buy again when price comes closer to 2390 and 2370. If it breaches below 2370, then the 4-hourly rising trend line, the blue line, will be broken. Then we'll talk about deeper correction. Okay, so this is the plan for upcoming week. I hope it adds value to your trading plan, and have a profitable trading week ahead. Bye-bye.